Alright, yes guys, welcome back to another YouTube video. In today's video, I'm going to be going over my full A+ entry checklist, the unicorn model. So we're literally be covering everything I need to know from A to Z in order to succeed with this specific strategy. But yeah, just a little announcement for you lot. As you can see from the background, we are now in Miami Design District. Also, I've got an even bigger announcement to make, guys. We've opened up a few spaces for the one-on-one online coaching mentorship. So if you are someone that is looking to take your training to the next level and you want that one-on-one mentoring specifically with me, then check out the links in the description. I'm only looking to take on a few serious individuals. Just fill out your details and book a call with me and my team. But other than that, guys, let's jump straight into the video. All right, so starting off, for someone completely new to the unicorn model that has literally no idea what it is, I'm gonna break it down simply for you lot with the next few seconds. So number one, you wanna look for a sweep of liquidity. This can either be buy side or sell side. And the main concept here is the fair value gap has to be paired or overlapping with the breaker block. That is the whole concept of the unicorn model. If you don't have the breaker block and you just have the fair value gap, then it's not a unicorn model. Okay, it has to be together and they have to be both paired in order for this to be an actual true unicorn. And then you simply just target the opposing liquidity. So down here, as you can see, I've actually included my A+ entry criteria. Okay, so I've broken down this model on my channel many times, but I've never actually included my A+ entry checklist of what I look for in order for the setup to be the highest probability. So first things first, you want to see a session liquidity sweep. So what do I mean by that? Session liquidity literally means different types of sessions. So this can be Asia session, New York session, London session. And you want to find the highest high and the lowest low inside of these sessions. And these will be your session liquidity areas. So for example, find the lowest low in London, that's going to be your London low. Find the highest high in Asia, that's going to be your Asia high. Okay, so hopefully this makes sense. Number three, you want to see a market structure shift, and not any market structure shift. Okay, you actually want to see a strong closure above a short-term high or a strong closure below a short-term low. And even better, if let's say you're going short and the low that price breaks through actually rebalance an inefficiency to the left of it, that's going to be an even more significant market structure shift compared to if that low didn't rebalance an inefficiency. Right, so keep that in mind. Number four, okay, is the main thing. The breaker block has to be overlapping with the fair value gap. So I will go over this example in just 1 second, but as you can see in this scenario here, this is the breaker block and it's overlapping with the fair value gap perfectly. The two PD arrays have to be inside of the same zone or area in order for this to be proper A+. Okay, number five, again, entry inside of PD array price range. So literally just what I explained a few seconds ago, it has to be inside of that zone where both the breaker block and fair value gap is. Number six, okay, stop loss placement. You want to put your stop loss either above a swing high or above a swing low in order for the trade to actually be valid and have some sort of breathing room so you don't get prematurely stopped out and then all of your take profits get hit. I've had that happen to me a few times where I've put my stop loss placement in a incorrect area. I've been stopped out of my position and then a few minutes after I come back to my screen and I see that all of my take profits would have been hit if I just kept my stop loss above that swing high. All right, so very important. Again, write that down. All right, number seven is the last and final bullet point. You want to target session liquidity. So London highs or London lows, Asia highs, Asia lows, very simple. Or you can even target relatively equal lows and relatively equal highs. Okay, that's a very strong drawn liquidity. So anyway, now that we've covered pretty much everything that you need to know about this strategy and the A+ entry checklist, we're gonna be looking at a few examples and actually breaking this trade down for you lot live so you can get a better understanding of how this model works. All right, so starting off, first bullet point on that list is gonna be a liquidity sweep. So it's gonna be either normal liquidity, session liquidity, or relatively equal highs or lows. So as you can see to the left of us, we've swept relatively equal highs. And the second bullet point on that list is clear displacement. So does price actually displace and give us a strong closure below a short-term low in order for a market structure shift to be valid? So as you can see, bullet point 2 and 3 have already been ticked off. We've clearly displaced below this low here. And note how this low was actually formed inside of this fair value gap or inefficiency. So this market structure shift is going to be 10 times more significant compared to if there was no inefficiency here. All right, number four, breaker block overlapping the fair value gap. As you can see here, so if you don't really know what a breaker block is, go over to my most recent video, which is the ICT mentorship. It's a whole free series on YouTube. That video does cover breaker blocks. So if you don't really know what a breaker block is, go back to that video, watch that, and then come back to this one. But in this scenario, we're gonna be marking out this down close candle here as our breaker block, all right? And of course, this right here is gonna be our fair value gap. I'm gonna have my entry at the FEG, stop loss above the swing high, and I'm gonna be targeting the opposing liquidity, which in this case is sell side, all right? As you can see, our entry is inside of the PD array price range. So everything right now is falling in line with our checklist. Let's just see if we can hit take profit. Okay, boom, TP smashed. So we actually nearly got stopped out there. As you can see, that fair value gap got inverted. However, we managed to start reversing and hitting take profit. So this right here was actually a bearish example. I'm gonna quickly find a bullish one for you lot and we'll break that down also. All right guys, so I've just found a bullish example here. And I also forgot to mention about the ICT macros. So include this in A+ checklist. You wanna make sure that the unicorn model or your entry is inside one of these specific macros, all right? So I actually forgot to mention, whenever you're trading this model, you want to make sure that your entry is inside of one of these specific macros that I've just listed out here in order for the trade to be A+. So I'm not saying trading outside of the macro is going to be invalid. You can definitely trade this strategy and model outside of the specific macros that I've just listed. And I've got many students that do that themselves and they are very profitable. However, in my case and me personally, I only trade these specific time windows. So in order for the trade to be A+, you want to have your entry inside one of these 30-minute time intervals, all right? So anyway, as you can see, we've swept sell side liquidity here and we've displaced above this short-term high here. As you can see, again, this high was formed inside of this inefficiency, hence this market structure shift is going to be more significant. So anyways, we've had a strong bullish closure above this high and we've left a bullish breaker block behind that is literally overlapping perfectly with the fair value gap, right? And now simply all we have to do is wait for an entry at the fair value gap or at the PD array price range zone, and note how the breaker block is literally on the same level as the fair value gap. So there is some cases where the FEG is slightly higher than the breaker block, and a ton of students of mine, they ask me, you know, Ben, do I enter off the breaker? Do I enter off the fair value gap? In this case, they're literally at the same level, right? They're inside of that zone. So you can enter and it won't really make a difference which PD array you decide to enter from because they're overlapping each other. Whereas sometimes the breaker block's higher and the fair value gap is lower. So some people may get confused with that. But in order for the trade to be A+, ideally you want it to look like this, okay? So anyway, I'm gonna take my long position off this fair value gap, stop loss below a swing low, and then target some sort of session liquidity, which in this case is gonna be New York highs. So let's see how this trade plays out. Okay, boom, there you go, take profit smashed. As you can see as well, we were inside of that final hour macro from 3:15 to 3:45 p.m. And as long as your entry is inside of that window, once we leave that window and you still haven't hit take profit, it's totally fine. You can continue to hold your position. All right, guys, so that's gonna be it for today's video. I'm gonna keep this very short and simple. If you have got some sort of value out of this video and you've actually learned something, then please leave a like, leave a comment of what you wanna see next. I'm thinking of actually doing an apartment tour of this apartment here in Miami. So let me know if you guys wanna see that. And lastly, of course, make sure to subscribe and I'll see you lot in the next one. Take it easy, guys.